Hey there, welcome to the channel. So today, going to take a quick look at what happened in the stock market. All right, so today got beat up a little bit. The SPY down 1.7%. So you can kind of see this is actually a great example of how things get complicated. So if you look at this, you had kind of a downtrend line here, right? And then it broke above the downtrend line. And then you had resistance up here, right? And the thing is, we broke above the resistance, we gapped above it, but then here we are down below. So what's really happened is we have it's one of these things where it makes it very deceptive, right? Because you're trying to figure out what's going on. Hey, are we getting out of this potential bear market? Are we getting into the bear market? Are we just, is this been a big, several month long correction and now we're going to start returning to our uptrend? Well, it makes it sort of a challenge there, because this in particular, look at this guy here. You really just, you gapped up, break, and you spend like 2 days above the previous highs over here. And then you spend, and then you basically go down and you're well below it. So we'll kind of see what happens with this, but it's still it doesn't really look that good right now. I mean, maybe things improve, but the setup seems kind of on the bearish side right now. So that's the SPY. And then the other thing I want to look at is is this an inverse kind of head and shoulders? Well, what I'll do is I'll just cut off that. All right. I'll cut off that part of the shoulders. And we'll just take a look at it. So if you have kind of a sloppy head and shoulders here, well, that would be the interesting thing. So if somehow this thing is able to find the low that's a low that's higher than the lows over here, then you potentially are in a better situation, right? So that's what we really have to see what's going to happen with this. So, but basically for today, it was kind of looking like a bad day. We're kind of in a consolidation range. That seems to be what it is right now. So if we just look, now that was SPY. If we look at the NASDAQ, this one got beat up more, 2.3%. And this one's kind of interesting too, because if you look at it, here was your high at about 370 and you just peaked above it, but it was even less. You spent less time above it. You spent 1 day, you had a couple days on the other one. So it really kind of failed. And then what's interesting here too, look where these lows are. Now look where the solids of the candles are. Yeah, you get these little wicks going down there, but you're already really on the verge of going below those wicks. You're below this you're right at the lows of those candles. So that's going to be kind of interesting. And then let's check IWM here. IWM, another, not down as much. Interesting, not down as much. If we look at ARK-K, so RK actually not down as much either. So it's interesting. So you can kind of see that, if you look at the smaller cap, like RK, it was only down 1.3% today. QQQs were down almost over 2% today. So that would imply CVQs are going to have those really mega large cap tech companies in there. So they're getting beat up a little more. And now in potential, you're kind of starting to wonder, well, is something like ARK, I mean, this has been so beat to heck, it's been beat to hell. Is this getting to a point where maybe it'll have a better chance of holding these lows? I don't know, but we will see. So looking at our oil, oil had a kind of a down day, 3%, we'll kind of see, is oil going to break, is it going to break the support around 95 a barrel? It's kind of close. So we'll see if it can do that. I mean, that would be good. If it broke, it would go somewhat lower. And then if we look at, I want to look at West Texas, similar kind of setup. It's right at that support line. So if we're looking at, it's right there, right? It's right at that support, so it's got to really hold if it's going to try to work its way back up here. If not, then, you could probably do like a measured move and be like, okay, you estimate it's going from 95 to 125. That would be 30 points. So then you could go down 30 points. That would put you back at 70, something like that. Now, that doesn't always happen, but that's kind of give you an idea how far you have to go to the downside. So now we want to look at the mess that's going on because of all the things in Ukraine. And We're going to look at our wheat. Oh, wheat going up 3% today. This is really, really bad, because what you have here in the wheat, just looking at this chart. Now, this is, this is kind of an end of day CME. So they're just reporting like the range from the day. It doesn't update. End of the day, they update it. But very, very interesting here, because if you look at your volume really ramped up in this period of time, and really heavy duty spikes in volume with this big move up in the wheat. And I mean, it went up from like, in the 800 range to 1200. That's a huge percent increase. But the problem that you have is that, yes, it pulled back a little bit, but now it's starting to go back up again. So we'll see. The resistance should be at 1125 here, but who knows? The worrying thing there is like, well, did this thing kind of just, obviously it went too far too fast? Did it pull back and kind of put a kind of a new little base in that it's going to use to go higher and break to new highs? That would be the concern there. So that's kind of a mess. One thing to note, just looking at the volume of this, the volume had really hollowed out here. See that? That's really interesting. I mean, it's very like, here you have your average volume, 60,000, whatever it is. And I don't know how they do these in terms of bushels of wheat, what exactly the unit is, but you can see that the volume has dropped off in here during this corrective phase. So it's very interesting. You have really kind of a peak, increasing volume in this period of time where the price went up, kind of supporting the move in the price. But then as it came down, the pricing, the volume really dropped off. So, and then now the volume is picking up on the up days. So now the volume is starting to pick up again. You see that? So that's kind of that's unnerving, because that would be kind of bullish for this chart, that kind of would point to like low volume selling, high volume buying, meaning kind of showing there's some serious underlying demand for that. All right, now the big disaster. Here we have our rates, and we're looking at the 10-year, and this thing just keeps pushing up, went up another 2.4% today. And like what we have, we're coming into that resistance, getting near the 3% range. So we'll see what happens if we really like peak out here. It's kind of an interesting thing, because what is this trying to tell us? I mean, I don't know honestly what it's trying to tell us. I mean, the market is selling these bonds. Now, what's interesting about this, though, see, is it, I mean, this seems to be happening ahead of the Fed. It's kind of like they're selling off the bonds like quicker than the Fed. I mean, they only raised 25 basis points. They're going to raise another 25. I mean, maybe they'll do a 50, but still, like, that's not that much yet. So this is really trying to jump ahead of the Fed. And I wonder, because, they had cut back their buying to zero in March. And now they're actually supposedly unwinding like 95 billion a month, unwinding of their balance sheet. Is that what we're really seeing here? It's very interesting, because what happening is that the demand is drying up, and the demand is being overwhelmed by, supply from the Fed. I mean, it could happen in two ways. One is the Fed had done so much buying, it has so many bonds that they're rolling over, that if they want to just maintain the balance sheet, that means that they constantly do a lot of buying to maintain the certain amount. But now they're letting them roll off, and they're actually maybe selling. I just wonder if the market is kind of picking up on this, and picking up on the selling pressure in there. I wonder if it's a reflection. So once again, for your bonds, the price, you sell your bonds, the price of the bond goes down, the yield goes up, right? Because the coupon of the bond is fixed. So I wonder if that's what's going on in there. But the market is definitely ahead of the curve, really ahead of the Fed on that one. So that's interesting. And the dollar is still working its way up. Just a huge, huge base. Gold. What is going on with gold here? If we look at this guy, yeah, this is kind of interesting here, because, just this really big base kind of an area, kind of a wedgy, wedgy symmetrical triangle-ish kind of thing that we did break out to the upside. And now we're kind of in this triangle here again, or maybe at some kind of a triangle, a flag. It really looks very pennant-like to me, like it's like a flag like that. And we're broke above it. And so that's interesting. So what is that telling us? I don't know. I mean, my guess is that it's probably got more room to go up right now. And that would be the dollar and gold going up together. It's going now to the weekly charts. Hey, look at your cues. Look at this. what does this tell you from a big chart? This is a weekly 2-year chart. You're talking about we are now into, pretty serious. I mean, the fact that it couldn't get back over these key markets, you had the death cross, you've pulled back now. You've been pulling back for 4 months, 3 to 4 months solid, pulling back. So this full market, it really like looking like it's over. I mean, this thing is now we're in the second week down below. Now, of course, it could change. It could come and reverse and set up a kind of W thing. And then if it, this would be the point right here. This is going to be your point of the W if it comes down and it stops somewhere and doesn't undercut too much. Like if it doesn't undercut the previous low too much, then you have that potential that it could break out of the W. But it's not looking that good right now. I mean, it looks like kind of a bearish kind of setup, because if you were shorting the market, where would you want to short it? If you're like, believe that it's going to go down, you really want to short it right at these points, somewhere where it fails above that, to get above that important moving average. And this one is the 200-day moving average. And it's also the 50 too. So, and then this, the spiders are a little better. So it's just like tech is getting wrecked here. If we look at the SPY, it's better because it had a better rally before, just like I had talked, I had a better rally up. So it got above the important moving averages, but right there, it's right on the cusp right now. So we'll see how this week goes. I mean, maybe it will hold, but probably not, it's probably got more selling to go. I think what's going to happen is, we're going to have the earnings start coming out, and that's going to have a big effect on things. Like it will have, if earnings are not as good, if the inflation numbers for the earnings are not good, that's going to be a big issue. Now, tomorrow we're getting your CPI report. So CPI is, I mean, at this point, the question is there any good news that can come out of it? I mean, maybe we get some kind of inflection in the CPI and it goes down. That might be good. I don't know if the market even cares at this point, if the market would believe it, but could be volatility tomorrow, because if the inflation comes in persistently high or higher than expected. I mean, if you look at me, Kevin, he's been looking for this inflation, to some point, try to get to a point where there's like an inflection and it starts going down. And then maybe, starts to continue to go up, but at a slower rate, or some kind of an inflection where like, look, it's on the downside now. And this would be like the year-over-year change being on the downside, meaning that overall, deflation isn't bad. So you still have positive inflation, but instead of like, this month we reported 10% inflation, maybe we're back down to, 5% on our way to like 4% or something like that. And so that would be, that would be on the bullish side. So we'll see what happens with that. But I'm doubtful, because the energy prices should get really priced in. So Ukraine energy prices, all that stuff should really get priced in. So I wouldn't be surprised if it's actually going to be really bad, because the energy part of it is going to be really bad. The energy goes into all the other products. So it's probably going to be really bad. And this is not financial advice, so I'm not telling you to bet one way or the other. I'm just kind of speculating on my own that it's probably going to be bad, because you had all this movement in the energy prices that really wasn't completely priced into the last CPI. So, because we basically got data. So we got data for February, right? And so depending when they took that data, you didn't get the whole chunk. So now we're going to be getting data for March, which is going to be just a disaster area. Now, on the other side of that, if you're kind of speculating, it's like, well, okay, so this inflation would be high in March, but if we end up breaking and then you look in April, let's say if April it makes it back down to 80 or 70, then you could imagine that your next month, that maybe the inflation might be good, at least the inflation with energy and stuff, which is not what they call the headline inflation, but still, that could be looked positive. So then when you go into May, maybe there's potential for a CPI that has some kind of improvement in it, if and only if the energy finally kicks and goes down. I mean, maybe if it did, in April, maybe it'll drop down, $20 per barrel. That would be good for that. I'll just comment on the Ukraine thing. I think it's really sad that there's just a lot of these, there seems to almost be this consensus that, from the West that they need to just keep pressing Ukraine to just keep fighting, and as if like they can win somehow. And it's very we're just not getting the whole story, and it's a real mess. I mean, if you care about people, it's very simple. If you care about people, you want to turn this off. You want to come to some agreement. You want to be the West and go in there, and you want to tell Zelensky, this is, you're giving up this, they're doing this, and be done with it. And, you know, a lot of people will come out and say, well, that's naive. That's blah, blah, blah. You can't trust them. You can't trust them. Well, look, it's always easy to start war. I mean, wars are the easiest thing to start. It's not hard at all. I mean, any idiot can start a war, but to stop a war or to take a pause in a war, it takes like a lot to do that. So the point being that if you make an agreement and Putin violates the agreement, okay, fine. Then you can always just go back on full bore with your other direction that you want to go and keep pressing. I mean, there's nothing to lose. There's this hippie guy from the Beatles, like, give peace a chance, right? But we're not going to do that. It doesn't look like we're going to do that at all. All right. Well, that's it for this one. Bye.